G'day guys, JB here for another one of our little updates. This time around I'm going to talk about the Auckland housing market. We've had some recent statistics that suggest the Auckland market slowing down. That's something that Squirrel we've been talking about for a little while. So no surprises really. November barfoot results suggested that the median house price dropped by 1.7%. And I would expect that trend to continue a little bit longer. I don't think that this is the market correction, because if you look at the economy, we've still got strong economic growth, we've got historically low interest rates, we've got full employment, we've got lack of building activity, and whilst we're building plenty of apartments at the moment, I'm largely talking about housing stocks and even townhouses in areas that people want to live. And we've got high levels of immigration. Immigration is still running at record levels, and there's nothing in the short term that suggests that that will change. Maybe the election next year will shift that, but for now we've got high levels of immigration. So all of these things to me support why Auckland prices are high. The reality though is there's a lot less speculation out there now. The unitary plans are kind of done and dusted. These LVR restrictions are certainly hampering the property investor part of the market. We've got a Chinese market that's just not there anymore, largely due to the LVR restrictions, but also restrictions around the use of foreign-based income. So it's a very different market to what we saw earlier in the year. Vendors are having to get realistic. It's moved from an auction environment to price by negotiation. That's kind of stalled the market, and sales activities dropped significantly. Sales are down somewhere between 20 and 30% on last year, because the gap between vendors and buyers is simply too large. Stuff's getting passed and it's just not selling. Gradually over time, vendors are going to have to get realistic and start to meet the market, and that's why you're going to see a continuation of price softness. I just don't expect it to be overly significant when you've got so many other things that are supporting the prices that are out there. From my perspective, in terms of how that will play out, I'm expecting Auckland City itself to stay largely static. You might see a little bit of price fluctuation there, but good properties will still sell for good prices, and we're still seeing that. Where you'll get maybe a bit more price variation is further out in the rental suburbs. South Auckland in particular, where house price appreciation over the last 4 or 5 years has been really high. And there simply isn't the buyers in that part of the market to sustain those sort of price levels. So I think the rumour, and you're sort of starting to get a little bit of anecdotal feedback now that there are patches of South Auckland and people that are in forced sale situations or need to get out of the market where they're having to lower their price expectations quite significantly. But outside of that, I think it's a story of really the market starting to stabilise. The good thing about this market is there's a lot more housing stock, a lot more options for buyers, and it just feels like it's a lot more orderly. Volumes at the moment are at very low levels, so if you're thinking about upgrading, in which case you need to sell and buy, that could be a bit more challenging in this market, and it's something to be quite mindful of. But hopefully what we'll see by March or April next year is that things settle down, buyer vendor expectations close up, in which case we start to get more turnover, prices stabilise, they stop going up, and hopefully on the other side of it, whilst it would be nice to see a little bit of price softness in there, certainly wouldn't want to see prices falling much. That's my view of it anyway. Talk to you next time. Cheers.